Hello, everyone. I'm Ernie Humphrey, the CEO and COO of Treasury Careers. Thank you for everyone taking the time today to join us for our webinar today, Mastering Dashboards to Deliver Strategic Value from Treasury. I would like to thank our sponsor, Financial Sciences, a leading provider of integrated enterprise financial systems for multinational corporations and financial institutions whose visual treasury and risk management solution, Atom, is helping companies unlock the strategic value of Treasury. There has been hype about dashboards in the past, but few companies have had access to the right data, let alone the appropriate tools to create them to leverage to improve decision making within and beyond Treasury. The good news is reality has finally caught up with the hype. Companies of all sizes are leveraging dashboards to impact performance across the enterprise. When designed correctly, dashboards deliver a clear message on what's working and what's not, and the actions that need to be taken to resolve issues and mitigate risk exposures. The big question has moves from how do we create dashboards to how do we harness this powerful tool to drive business behavior. Today you'll discover how companies are leveraging dashboards to deliver enterprise-wide visibility into financial and non-financial operations, workflow, relationship dynamics, governance and compliance, cash flow dynamics, and financial controls. This visibility facilitates business agility and allows companies to leverage analytics to facilitate data-driven decision-making and behaviors that improve performance across the enterprise. Before I delve into the content, I'm going to offer a few quick words about treasuryjobs.com, cover a few housekeeping items, and review our learning objectives as they are our value proposition to you for investing your valuable time with us today. Treasury Careers is a division of treasuryjobs.com. We offer content and resources that empower Treasury professionals to own their career success. Some highlights, some great Treasury certification resources, complimentary webinars like this one today, and a plethora of Treasury best practices. Now our exciting housekeeping items. The slides are currently available under the handouts area in your GoToWebinar control panel. I'll be sending you a link via email to the presentation and the recording over the next 24 hours. For those of you interested in CTP credits for today's afternoon, you'll have to answer all polling questions and remain on for the duration of the webinar. If you have any questions relative to CTP credit, please send me an email to ernie@treasurycareers.com. We'd like to hear from you, so I'd like you to ask your questions at any time during the webinar in the questions area of your GoToWebinar control panel. I'll do my best to get to all of your questions at the Q&A session at the tail end of the webinar. Fear not, if I do not get to your questions, I will follow up with you directly after the webinar. Finally, we appreciate your consideration in taking a short survey at the end of the webinar, as we always strive to improve the ROI we offer our event attendees for their valuable times. So what's our value proposition for you today? What are our learning objectives? I want you to better understand 7 key dimensions of Treasury success, identify specific opportunities to mitigate challenges your company faces relative to each key dimension of Treasury success, and to understand how to leverage technology to optimize liquidity, improve customer, supplier, and bank relationships, and help unlock the strategic value of the Treasury function at your company. So how am I going to accomplish my objectives today? A little bit about our agenda. We're going to cover, again, 7 dimensions of Treasury success. And within each dimension, we're going to talk about the challenges faced relative to Treasury success. We're going to talk about how to leverage dashboards relative to each dimension to mitigate challenges and unlock opportunities. And then we're going to offer you some additional resources and some closing thoughts. Now, the dimensions of Treasury success that we're going to cover today include banking and bank relationships, cash management, forecasting and liquidity, debt and credit management, risk and compliance, hedging, and financial reporting. Yes, the Treasury function has been undergoing a paradigm shift in terms of all of that falls under our umbrella. The good news is that technology is helping us own these responsibilities and deliver value relative to each dimension of success. So in order to level set, I'm going to go ahead and launch our first polling question today. And our first polling question is asking you to share with me the most important strategic initiative at your company in Treasury over the next 12 months. That will help me focus on my presentation a bit and where I might spend a little bit more value today. First, I appreciate everyone's consideration in answering all of our polling questions here today. Those of you who are interested in CTP credits, again, you'll need to answer all of our polling questions. And again, I'd appreciate your consideration in asking questions in the questions box in your GoToWebinar control panel. So in order to be mindful of our time, I'm just going to go ahead and leave the polling question up for another 5 or 10 seconds or so. Then I'm going to go ahead and take a quick look at the results, make a few comments, and then we're going to get back to our content. And I'm going to talk about, to kind of level set things, we're going to talk about how dashboards allow us to unlock strategic value in Treasury. So I'm going to talk about some dashboard best practices. So I'm going to go ahead and close our first polling question here, and then I'm going to go ahead and share the results with you. So I guess, and hopefully not surprisingly, the biggest response is going to be using technology to improve the processes here. So that'll be a big focus of ours. Again, in dashboards is a key tool, and we will certainly hit on all of these other areas. And the good news is that we're going to cover all of these dimensions of Treasury success. So again, just interesting polls, and I will actually probably share the polling results in a blog that I'll write subsequent to the end of the webinar. So thank you very much, everyone, for your consideration there. So again, to level set, we want to talk about dashboards. The bottom line is that a good dashboard will put you in control and help you manage a lot of complex data quickly and proactively. If it doesn't meet the standard, it's not an effective dashboard. And if you don't reach that satisfaction level, either the dashboard is incomplete or it's too complicated. So just on a high level, 3 key characteristics for successful dashboards, the best that I've seen: visual approach to managing Treasury activities, reporting, and workflow all in one. It sounds like a lot, but it can actually be accomplished. You want the dashboard to be efficient. You'd like it to combine workflow, functionality, business analytics, and reporting into one integrated screen. And of course, you want it to be customizable to fit into that company's individual workflow. When I talk about best practices, I often like to talk about things that you don't like to see. So in terms of common dashboard mistakes, from what I've seen and in talking to thousands of Treasury professionals over the last 10 years, a lot of times they show too much granular detail on the first view, and it makes the dashboard hard to quickly understand and ineffective. So when you open that dashboard, you want to have immediate access to the information, immediate value. You want to really get exactly what you're looking for, and dashboards should allow you to click through logic to drill into the details where necessary. So as we look at some screenshots of certain dashboards that we'll look through, you'll just see some boxes, and you have the ability to click into those boxes is key. And the dashboard should be simple and organized, and related charts and statistics should be grouped together. And there should be some flexibility, in terms of how you get those dashboards. And then finally, a couple other things. Another thing is one size does not fit all. So dashboards should be parameterized so that you can filter dashboards for certain legal entities, banks, etc. So you don't want to have that completely static dashboard. You want to be able to customize that, and then you might have different folks within your Treasury department or even your CFO that would like access to these dashboards, and certain things are going to be more important to them. And then another mistake is dashboards that don't show context or comparison target values so that users know when a problem or exception has occurred. So again, just to kind of level set here, some dashboard best practices. And this is really what we need in order to really help unlock the strategic value of Treasury. Dashboards done right can inform better decision making across the enterprise, but dashboards done wrong can actually have us make even poorer decisions. So we need to make sure that we invest in the time and the right technology in order to get those dashboards set up and leverage those to the best of our ability. So let's go ahead and dive into our dimensions of Treasury success. Effective banking relationship management is critical on many levels. The right bank relationships need to be in place to help fund operations and to offer the Treasury services that support the execution of a company's short-term and long-term strategic visions. So just some of the barriers to success in terms of this dimensions, and what you'll see is that across several of these dimensions, these barriers to success will be similar. And then what you'll see as I go through each dimension, that I will have a technology solution section where I just kind of highlight where technology is helping us overcome these barriers. And then I'll go ahead and share a few screenshots of what I believe are some really compelling dashboards. I'll make some commentary on what's on the dashboards, and also share my experience as a Treasury manager in terms of the value of the dashboards. And most of these most of these dashboards and the information on them I didn't have access to. So I want to speak to the value that this would have offered me back when I was a treasury manager in terms of delivering value in treasury from my company. So barriers to success. First one in terms of the bank, the relationship, and just is the connectivity. So the connectivity to the banks. Back in the day, I might be dating myself when I was in Treasury. Uh, we had to individually negotiate MT 940 transactions, so I didn't have that connectivity to those balances, activity, and currency positions. So these two are related. So those inherent barriers, lack of connectivity, that lack of visibility, and then the lack of the ability to just communicate effectively. There are some collaboration hurdles. Of course, a couple other dimensions of bank relationship managed success are if there's no way to do a comprehensive analysis of your bank relationships, what is the depth of that analysis? How much fee income are we driving to the banks? Associated with that, what is our counterparty risk exposures relative to a bank? And of course, a pain point of mine as a treasury practitioner is bank fees, visibility into those bank fees, and also the ability to benchmark those bank fees as well. So in terms of the technology solutions that we have there, again, it gives us visibility into our banking relationships, the depths, the dynamics. It facilitates effective bank account management. EBAM is electronic bank account management. Technologies allow us to manage signatories and, of course, our favorite FBAR requirements, and also allow us to do that bank fee analysis. So when I was in Treasury, something that kept me up at night was just understanding the bank fees being charged to my company, and then how to benchmark them. So, and I needed to make sure that I was not being overcharged, but I also needed to allocate my bank fees to keep those banks with which my company had credit arrangements happy. So I think that's even more important in today's credit environment. Really focus on RAROC and almost getting to the point where there's tying. So we need to have that visibility into the fees that we are experiencing from our banks. Then we need to be able to benchmark them and see if that makes sense. I hate to say this, but it might be the case that your bank fees may be a little bit out of line in certain areas relative to AFP service codes, but that might be something that you need to endure in order to have the right credit relationship. And now, in terms of this dashboard that I have up now, the things that are also very important to me are just the alerts that we have, right? So on the left side, we have the bank accounts. So if there are accounts that I have to improve, and of course, accounts in overdraft, hopefully we're not going to see anything there. 9 doesn't mean that we have 9 banks in overdraft. What 9 means is that there's the ability to click in there. And these circles are actually related to process workflow, and I'll get into that a little bit later. So one of the really cool things about some of the dashboards in the market right now is it really allows us to give that immediate access to that workflow and look at bottlenecks. And again, I mentioned before, a big pain point of mine, signatories to approve, assignments to improve. So, and then also another thing here, you look at the bank contacts, so you can actually drill in to the bank contacts, facilitate that immediate communication. Let's say we see something, accounts in overdraft. What do we want to do? We want to immediately reach out to our bank contact. I don't want to have to go out into my ERP, look up that bank contact. I want to be able to efficiently, boom, pull these things up. And then some of the other neat things here. I mentioned some of the counterparty risk. We have an area here for ratings class. So and some of our policies may be related to that. So it's pretty. There's some pretty compelling statistics here. But again, on the focus of this is just the ability to effectively manage the bank relationships, and again, some of the risk management characteristics. So again, just to add a little bit more color, when I was in Treasury, I was tasked with centralizing cash management across 13 countries and 70 bank accounts, and I can't tell you how long it took me to just figure out who the signatories were on the accounts and how much consternation that caused me. So the ability to have that visibility and also make those changes in an effective manner, that would have been tremendously valuable to me. And again, on the counterparty risk side, back in the financial crisis of 2008, I used to moderate roundtables for the AFP, and a lot of treasurers were being asked, what is my risk exposure to, just for the sake of argument, say JP Morgan Chase, and they just said, I absolutely had no idea for that. So some of these tools that we have, which are obviously have great systems integrability to our ERP, potentially some outside banking systems, so other systems that we have, even Excel. So this is really facilitates the flow of information back and forth. So again, that account management is key as well. And then if we want to take a dive down, if we, let's say we just want to look at our balances, again, that the visibility in our balances is key. What's our position in US dollars, so we can easily see those currency positions. We'll get into that a little bit later. So that has value on many levels. It gives us our current position, and we'll talk about FX exposures that we might have. So a lot of these things are really interrelated. So a lot of these dimensions of Treasury success are absolutely related. So again, this is just interesting in that you can, at the push of a button, to just kind of boom, and then we picked U.S. dollars. But let's say, for the sake of argument, that I'm getting ready to fund a contract, building a plant in Mexico. So maybe I just want to see how we're doing in terms of pesos, because maybe I need to make sure I've got that ledger balance in there to fund a construction payment. So incredibly valuable. Again, all at the touch of the fingertips, and really just about that immediate access. And then here's a view in terms of bank relationship fees. Let me give a little context on fees, and I'll explain what this dashboard shows. But again, just knowing what fees you're being charged is challenging. And this worried me so much, I actually worked at the AFP, and I was actually in charge of the AFP service codes. So the AFP service codes give us some ability to benchmark fees in terms of comparing apples to apples across banks. And then what you're looking at in terms of the dashboard here, on the top, what you're seeing is just some fees by banks. And so on the bottom, it actually gives us the ability to run some what if analysis. So let's say, for the sake of argument, I've got my fees with Bank A, but I want to consider moving that to Bank B because we're going to have a credit relationship. We can actually look at the impact that might have on the bank fees that we are charged. So this gives us a way to level set and do this what if analysis in terms of if we're looking at moving our fees. So as I mentioned earlier, one of the things that's really important in today's world more than ever is to really manage our portfolio of bank fees, and really how we are allocating that across our bank relationships. And again, this is just really cool to me as a former Treasury practitioner, is just the ability to get a look at those fees. You'll see the family name. The family name is that top level AFP service codes that we have, and the ability to do that comparison, and then really play that what if you were to move your fees around based on these top level AFP categories. So now we'll switch to cash management. Cash management is always going to be a key dimension of Treasury success at any company. The foundation of effective cash management is visibility. You can't manage what you can't see. You can't effectively manage cash with untimely information, and you can't manage cash effectively with inaccurate information. In theory, it's always been simple. Real-time visibility into current cash balances by bank and by currency, and visibility into payment and receipt activities. It is only recently that bank activity and related Treasury technology have made this a reality. So what's very common today with companies of all sizes is barriers to success in terms of cash management. Touched on this earlier, just that systems integrability. So if you don't have a TMS, how is all that information getting pulled into one place from different online banking systems, Excel, your ERP system? So really what that does is that really limits your visibility and the timeliness of your information. So the better information we have, the sooner we have it, that's going to allow us to optimize our cash flows, Related to integrability, again, you don't have good integrability. You can also have problems in terms of visibility. And then information quality and timeliness are also issues, especially if you are doing maybe one-to-one with your banks in terms of getting that information to you in some way. And in my past, sometimes that information would take 1 day, 2 days, and 3 days. And then also, you can have information quality issues if you're in a very decentralized environment and you might be relying on someone who works at a subsidiary to report back up to you. So then you can have information quality issues as well. And then just related to cash management in general, you can have a lot of process inefficiency. One of those that we'll talk about is just cash application, what to do with that cash when you see it coming in. Are there workflow rules that we can use to really facilitate that effective cash application? And delays in cash application can cause many issues. One of them that I experienced personally as a treasury manager was that we inadvertently had companies on credit hold because cash application hadn't happened. The last thing you want to do is have angry suppliers when they've paid and you don't have that reflected in your system. And then, of course, some barrier to success is just some analytical tools to really slice and dice in terms of what we need to see in terms of our cash position and the transactions that we have that are coming on the horizon. In terms of the technology that we have, there's technology out there, TMS, it can function as a payments factory. Again, in best cases, immediate cash positioning. And then in terms of cash on the way in, auto match and reconcile. Again, I can't tell you how much time my accounting professionals spent just in terms of the cash application side, just reconciling things. And some of these dashboards allow you to really facilitate that mapping and workflow where you can put GL codes on there. So that's just a straight through feed to your ERP system. Again, related, some of the ways that we're communicating and getting this information all in one place, Swift access, EDI, or Bank Direct. In a lot of cases, on the providers of the treasury management systems, will facilitate that Swift access and or work with your banks in order to get them reporting so you can take that burden. Again, back in the day, I was directly negotiating MT 940 transactions, so that's really painful. So in terms of the cash management dashboards, Treasury dashboards can offer visibility into forecasts by bank and into progress and processes relative to the construction of a centralized cash forecast. And this visibility allows companies to effectively manage the forecasting process in addition to the timeliness and quality of that cash forecast. So as a treasury manager, this might well be a dashboard I would have liked to see first thing in the morning as I came in. And where would I focus my attention? Probably first down at I might have the alerts up a little bit higher, but the alerts are definitely something that would catch my attention. I want to see unknown ACH debits. That's going to give me heartburn right in the morning, right? I want to look at my ACH return, and then I want to know if I have any unmatched payments. Other kind of interesting functionality here in the dashboard that we can have in today's world is our auto match percent in terms of those bank transactions coming in. And then in the top right, what we have is sessions reported. Okay, is this up to date? Current to date, sessions not reported. What are we waiting for? And then also a compelling thing is this balances reported by bank as well. And then we can get a look at our transactions by bank and transactions by currency. But again, as a treasury manager, this is probably the first thing I would do. I would almost have this immediately pop up when I come in. Are there issues that I need to take care of? I wrote many articles on how much time I spent investigating payments and debits and everything else. And if we're going to have those issues, it's good to have those right at the beginning of the day and really get a jump on those. But the cool thing is that these dashboards can also give us an indication of where those issues are and then how we need to attack those issues, right? Just remember our past dashboard, if we see it's a ACH return with a bank, I can toggle over to my dashboard, see who my contact is, get that phone number, boom, hit the ground running, and then get us back to more value add activities. And this is a drill down again, just to step back a little bit, what you'll see is the little boxes you can actually click into each one of these boxes, and then you can drill down. And this to me is fascinating. You can tell I get really excited about Treasury, cash management, and related tasks. But so it can give you visibility into items that haven't cleared by bank, and so you want to take a look in there, see what's going on. If you know, see if some investigation needs to be done. You can look at that description. So again, just the ability, boom, see what you want right out of the gate. See things that you want to take care of. See things that might need your attention. Is just really important to getting your day off to a good start. And then maybe the second dashboard I might want to see in my day as a treasury manager would have been something here, on the payment side. So it also related, we'll talk this a little bit later, is on the payment side, on the cash forecast side. Are there things going on in the payments world that I'm not expecting? Am I going to get hit harder with payments than I thought? Am I going to get hit with less payments? And that might affect how I set my end of day cash position. I might want to see if there's a bottleneck in my payments ready for release. Payment sent not confirmed. I want to see what's going on there in terms of the back office there, what's going on, and then payments ready for approval. Again, 53 is not really that I have 53 payments. It's related to the workflow. And then, of course, on the lower right-hand side, my payments alerts. Of course, these transmission errors are really important. And then we want to look at our ACH returns. And then if we look at and then this really gets into the workflow. So this is really, really cool. And I was just actually surprised that we got into the place where we could really tie in that workflow. So for example, we could take a look at that workflow. If we see, if let's say this is from the lower right hand corner, so we see that transmission error. So we can see kind of where that fits into our flow. Okay, sent not received. So in order to have this, just the ability to pull this up and have this is really important. Helps us also identify bottlenecks. Also can help us with those questions, possibly auditor questions, possibly someone you might be collaborating with across enterprise. Maybe it's accounting. Maybe it's your AP team, so they come over. You get to the dashboard, you want to look at that workflow, and then this is available at your fingertips. So one of the things that obviously we need to do in Treasury is be very effective in our processes, and having the ability to really pull up that the workflow, in this case the payments workflow, is really critical, and this just gives us the visibility. So visibility in times is visibility that's going to give us some direction into areas of improvement. So we want to be in a process of continuous improvement. We want to lower payments costs. We want to lower cash app costs. We want to optimize and own our cash conversion cycle. And all of these things together really help us own that and give us that visibility, and really allow us to be proactive instead of reactive, and in some cases be proactive in real time as possible. So as soon as I get in the morning, or I can even look at this at night, right? So if I've got operations overseas, there's nothing that's stopping me from accessing this information overnight, and then I can be ready on the jump in the morning. So again, cash management, obviously very, very key in any environment. And then the ability to forecast cash effectively, again related to cash management, is obviously a key driver of what we just discussed. Cash management success and visibility into cash balances and past cash movements, they really offer the foundation for an effective forecasting program. So some barriers to success. Again, you're saying I'm seeing these same barriers to success all the time. Well, again, they're interrelated, and the good news is when you take a step back, you might want to say, okay, let me just sit down and write what are the dimensions of Treasury success that we talked about, and then do your own exercise. Okay, these are barriers to success. And then if I could remove these barriers, and then you start to build that business case. What if I had more visibility into my cash balances? What if I was able to collaborate more effectively? What if I had more analytical tools? What if I got the information earlier? And then you can start to put that business case together. And then, of course, I should have this on more of the slides, right? One of the keys is that a lot of barriers to success cause us to be reactive instead of proactive. So having instant access to this information a lot of times allows us to be proactive, so we don't have to wait for a call. We can actually make the phone call. And then in terms of the technology that we have to address these barriers to success, the technology allows us to more effectively do some forecasting modeling. And then of course we talked about the integrability and really to make these systems communicate with each other. And in terms of forecasting, in addition to TMS, there's a lot of systems, FP&A systems as well. So so if we're doing a rolling forecast, that forecasting, that planning and budgeting, so the more ability that we have to push the information back and forth within as well as outside Treasury is going to really increase the value that we offer. Again, a big piece of this is not only making better decisions within Treasury, but offering information to our colleagues in terms of making better decisions across the enterprise. So dashboard here related to forecasting and liquidity. So the big takeaway that I get from this and why it's compelling to me is just the process. This can often be complicated in the forecasting process. What kind of pending forecast do we have? Do we have unmatched forecasts? So where am I at in that process flow? And then in terms of liquidity, always important. I'm up to date in my credit facilities. What's my borrowing capacity? So again, in one place, I can get a view of my forecasted cash. What are my credit facilities? What are my borrowing capacities? And then flipping back to the other screen, okay, what is my current cash position? And then on the lower right, what we have is our forecasted payments and receipts. So this is, of course, always important, but it's more important if you are a net borrower. So the ability to come in and really dial in on your needs is very critical, because the last thing that we want to do is we want to go out and borrow money when we don't need it. And we'll talk about this a little bit later. The other thing that we certainly do not want to do is we do not want to go and engage in foreign currency transactions, hedging instruments when we're doing this just because we have incomplete or inaccurate information. So this again, just some more drill down, just to make the point that we can drill down to any of these areas. So this will give us by bank, if we want to look at that in terms of building up that forecast. It gives us the ability to go in by that day. Again, the forecasted inflows and outflows, and then you can actually click in and see where these are coming from. So again, it gives you the great starting point. You pull this up, it gives me it kind of directs me where to go, allows me to make better decisions across the enterprise. So, of course, another important dimension of Treasury success, managing debt and counterparty risk relative to suppliers, customers, and investments, and those who help fund operations are key dimensions of Treasury success in today's world. As I mentioned before, back in 2008, I heard endless stories of how treasurers were asked relative to counterparty risk, relative to all of these parties, suppliers, customers, investments, and so they didn't have that visibility in order to say, okay, what's our exposure, let alone how do we manage that exposure? So that leads to our barriers to success. Again, Ernie's the broken record today, right? The visibility, and then the collaboration hurdles and the information reporting. So in terms of the technology solutions that we have available, again, some of the things out there allow you to see that real-time access, really perform almost real-time liquidity management. It gives you real-time visibility into investment performance, your portfolio. and then visibility into your current issuances of debt, the borrowing capacity, but also, which you'll see in a moment, is very compelling information relative to risk by asset class. So you can really be a key player here in terms of enterprise risk management, and that's certainly coming under the umbrella of Treasury management. So just a little color again, another dashboard here. Important again, I like to set my alerts here. So take a look at the alerts, see what we've got there. Important to get a quick look at our borrowing capacity. But then we see which this is really compelling to me. You have your top 5 counterparties. You have some metrics here in the upper right that are your debt service ratio. So those can be compelling as well. And then you can look at your maturity portfolio as well. So it gives us a snapshot into that debt, the structure of our debt, the ways that we set up, different programs that we have, all customizable, and you can move those dashboards around, but you can also drill down into those dashboards as well. So now I'm going to go ahead and launch our second polling question here as soon as I can. All right. So this is important in adding value across the enterprise. So I'm asking you to share with me who is your most important internal customer in Treasury. So we look at all the great access to information that we have at our fingertips. So as we prioritize, the dashboards and the technology that we invest in, we need to look at our internal customers. So not only do we need, again, to offer value within Treasury, it needs to be across the enterprise. And a lot of times, our colleagues across the enterprise look to us in terms of data management, helping them not only get the data they need, interpret the data. And some things that we can do a better job in Treasury is being proactive, right? So let's go over to sales, marketing, HR, and say, what kind of information do you need? And we might be able to help facilitate that information. And we might be able to pull that information, into a dashboard. Just because it says Treasury dashboard doesn't mean that we need to limit that to what we would traditionally think in terms of Treasury, because that term is obviously changing and more things are falling under the Treasury umbrella. Again, those of you interested in CTP credits, you need to answer all of our polling questions. Of course, we appreciate everyone's consideration in answering the questions. So I'm going to go ahead and close that polling question, and then we'll take a quick look at the results. And we see the vast majority is FP&A, which is good, and about what I would have expected, given that Treasury is taking a more active role, if not collaborating, then really owning the FP&A. So I talked about this quite a bit. So again, our access to that information, being able to create those dashboards, be able to help our FP&A colleagues understand and those forecasts as well. So one of the key things that we're going to offer our FP&A colleagues is the ability, is our forecast, the quality of the forecast, if not doing forecasting for them, how they forecast and facilitating that across the enterprise. And of course, very important for our sales folks as well, right? And take a look at that pipeline. And we should have a more collaborative relationship with sales. We shouldn't just go to sales and say your customers aren't paying. We need to be strategic partners with them on how to look at the health of their pipeline, so we can create dashboards in that area as well. And again, just a reminder before I get back to my content, is that I can take your questions at any time in the questions area of your GoToWebinar control panel. Again, I'll do my best to get to all of your questions during the Q&A period. Again, if I don't get to your questions, we'll certainly follow up with you afterwards. And don't feel that you need to restrict your questions to the specific dimensions of Treasury success that we're talking about, or Treasury dashboard. Anything related to offering more strategic value from Treasury, I'm certainly happy to address those questions as well. So now let's go ahead and shift gears a little bit, kind of related to what we talked about before. Obviously, managing risk exposures is also a key component of Treasury success. And what we'll really focus here on more is financial risk management, but we're really transitioning more into non-financial risk management as well. Of course, the first step is visibility into the exposures, and then subsequently informed decisions can be made relative to if and how to hedge these exposures. And the good news is that we actually have some functionality that, in essence, somewhat automates hedge accounting and the compliance issues that are complicated, not only related to financial risk but non-financial risk as well. A little bit different in terms of barriers to success in terms of risk exposures and compliance. And compliance is a tremendously dynamic element in today's world, and then especially as you go across borders. There's just regulatory, legal requirements, internal controls. So in order to, we need to be able to understand not only what the regulations are, but how we are in compliance with them. And this is where the process flow can really help a lot in terms of, there may be some process flow in terms of who's responsible for making sure that we are complying, maybe where we're getting that information from as well. So in terms of the technology solutions, the risk and compliance area, we talked about this. There's views where we can get at better managing credit. We can look at exposures by our customers, look at those credit limits. We can also toggle back, right, and look if we've got things stuck in cash applications. We can also potentially pull up information on the payments history, so the credit. So we don't want to inadvertently put our partners on credit hold. And then we talked about this a little bit earlier. It's interesting now that you can slice and dice by specific products. So you can actually look at risk exposures by product line, which to me is incredibly compelling. You can look at policies and procedures. You can look at those. And then, of course, we can get instant global positions. And we can get these positions by many groupings. But what we can also do is we can start to assign how we want to look at the risk faced by our company, depending on the industry that we're in, whether we're in manufacturing. How do we define those asset classes, or liability classes, I should say, and then how do we look at those risks, and then how do we drill down in there and really assess the dynamics of that risk and how we are managing that risk. And that goes beyond the financial risk that we might face. And near and dear, of course, we want to look at our most common is FX. So we have a dashboard there, so we can look at our currency positions, so by different currencies that we have. And then this is what I talked about a little bit, which is compelling to me. You can take a look at assets by product, liabilities by product. So you can look at, you can even start to do that product analysis, right? Even that balance sheet, assets versus liabilities. You can take a look at your what you're looking at, the assets that you have by currency. You might be able to identify some possibilities where you might be able to do a better job in creating some natural hedging as far as currency is concerned. We also have assets by rating, so you can start to see there. So you can see again, top 10 assets by equity. So it's really giving you the visibility. When you come in, you get that snapshot. And this is especially important when you maybe get questions asked you by the CEO, by the CFO. If you have that board of directors meeting come up, you're going to get these questions. And also, in terms of collaborating across the enterprise, let's talk about, our marketing folks and sales folks. You're looking at assets by product, liabilities by product, so we can help them more efficiently manage the investments that we are making relative to our key product lines. You can also do these relative to service lines. This is a little bit more oriented towards a manufacturing environment. And then, of course, related to this, now we can see the exposures, get a sense, and now we got to make a decision on how we're going to hedge our exposures. Similar barriers to success, just identifying the risk exposures where they exist, visibility in the risk exposures, and then some barriers to success we have our hedging policy administration, our hedging instrument execution is how difficult is that, the related information reporting and accounting, and then some of the technology allows us, gives us visibility into risk and cost, and believe it or not, can facilitate that full hedge accounting if that investment is made up front, and then it gives us visibility into interest rate, FX, credit, and commodity derivatives that we have, and able to look at our position. We'll look at this in a moment. How much is actually hedged? Is that compliance with policy? Hopefully it is. Hopefully you may have things set up which ensures that you are in compliance. Again, exposures related. And then if we just take a look at some of the dashboards that we have, again we have some exposures. We have information to our FX rates and our options as well, so we can really drill down into our exposures, which I think is really compelling. Gives us the ability to dial down in there, and then in terms of looking at the percentage hedge, exposures hedge by period as well. And then look at this. Oh, is it going to scare me? It better scare me. I'm non-compliant. So what actions do I need to take in order to hedge those exposures? So it looks like what we might have is we need to hedge at least 75% of that exposure. So we need to get that percentage up. So and again, this gives us the ability to forecast effectively what we're going to need to do on terms of the hedging instrument side, compliance in our policy, and that if there's any reason to be non-compliant, we want to be proactive in that as well. So it helps us on the execution side, on the process side, gives us the ability to look at exposures over time, which gives us something there as well. So now, kind of another thing which really doesn't get enough, attention. We talk about it, but there is tremendous value to being efficient in terms of the financial reporting, and that we either do directly or we facilitate with our accounting colleagues, similar to some other barriers to success, dynamic financial and regulatory reporting requirements. And then we have a lot of collaboration hurdles in terms of where information is coming from, who's getting the information, who's responsible for the information. And then, of course, we would like to have the analytical tools which allow us to really be monitoring and actively managing the compliance in all areas. And this can also help us identify areas where we need help in terms of improving our compliance and potentially our processes as well. And then in terms of technology solutions, a lot of the financial reporting can be set up where you're automating journal entries. There's integration with ERPs and GLs in terms of a TMS in general. Of course, reduce your time to close, and we talked about some of that hedge accounting. So a lot of these barriers to success with the right Treasury technology solution, including, of course, the dashboards as well, can give us a good customizable snapshot. And again, there might be the opportunity for us to facilitate dashboards to our colleagues across the enterprise as well, to help them manage their time as well better. And what does that do? That increases productivity across the enterprise. Absolutely. So just in terms of some closing thoughts, again, we've covered quite a bit here, quite a bit of information. Again, you have access to the presentation in your GoToWebinar control panel. If there are specific Treasury dashboards, you want to learn more about that, you'll have the opportunity to ask to be connected with our webinar sponsor, and they'll be happy to walk you through what the possibilities are. And then, of course, of all the questions that you have on how this information is coming and going, and then the implementation time and logistics of that. So in terms of everything that we talked about, I'll put a fine point on this in the next few slides, but In terms of the ROI of right-sizing Treasury technology in general, you want to start to look at that business case, right? So what are the components of the business case? Okay, something that facilitates cash and risk visibility, that's a component of our business case. What's the value? Optimization of cash flows, improve working capital management, mitigates risk exposures, mitigates our compliance risk. In terms of when we do automation in all areas, increases efficiency, decreases costs, improves quality. It supports company growth and scalability. It improves accuracy, response time, and productivity across the enterprise. And our last polling question, it improves Treasury customer service. And who is it really important that we give good customer service to? It is going to be our CEO and our CFO and our treasurer if we're not the treasurer. So it's really amazing what we can do, what we can see, how we can slice and dice, how we can control processes, how we can do what-if analysis almost on the spot. And then a few more components of that value proposition. Risk management, you can proactively manage risk exposures and identify mitigation options rather than handling risk exposures after the fact. Promotes the leveraging of advanced analytics. You can get benchmarking and comparisons, which lead to lower costs. And in addition to lowering bank fees, you can develop effective financing options. We can report KPIs to promote continual improvement. It allows us to become a strategic advisor to the executive management and across the enterprise. And then we can offer tools to determine the best methods and instruments for key measurements of Treasury success, financing, hedging, and investing. So one of the questions that I always used to have when I was a Treasury practitioner was, I get to the end of the webinar and I'd be like, that's an awful lot of information. So how do I get started? So let's take a step back here. So strategic treasurers and all Treasury departments harness the power of technology to support decision-making process, and they want to execute the right decisions anytime, anywhere. So where do you begin, right, to just see if the business case makes sense, build the business case? You want to examine your existing Treasury team. What's the skill set that you have relative to the dimension of success in terms of technology to support success in those dimensions? What's my existing data? What's my data access? And what kind of systems do we have? And then how do these systems communicate with each other? You got to take a good look in the mirror, folks. You got to examine the processes and manual effort needed to compile and distribute reports that inform decisions or involve the direct execution of strategies. And then this is really key for me. This is most important. Identify gaps. Keep it simple. People, process, and technology. They're inherent barriers of Treasury success. Determine how to get the most out of your current setup while looking towards how to invest, improve, and align people, process, and technology. What are you trying to do? You're trying to fuel maturity in your Treasury department through optimized, secure, and efficient workflows. So again, the business case almost makes itself when you start to look at those gaps that you have, and then you start to see, okay, what are the improvements that I could make, or what are the hard dollar benefits that I can realize in terms of cost, in terms of productivity across the enterprise, how much time is spent. And let's look at accounting, how much time is spent doing journal entries, accounts payable, how much time do we spend on the phone, how much time is my credit manager on the phone. If we have better information, communicate that, how much more productive can we be. Also, of course, we can talk about optimizing our debt portfolio, optimizing our payments portfolio. It's kind of like you peel back the onion, and this visibility just really unlocks this treasure trove of value in terms of the Treasury function. So I'm going to go ahead and launch our third polling question, just a little bit of fun. So it's asking you, if you had $500,000 to invest anywhere, where would you put that money? So just kind of fun. Again, those of you who are interested in receiving CTP credits, you need to answer all the polling questions. Again, I can still take your questions in the questions box if you go to webinar control panel. Again, I'll get to your questions. after the webinar if I don't have a chance to get to those directly. So, so I'm getting several specific questions. Just want to take some of these, not one-on-one, but in groups. So I've got several questions about, the provider of the dashboards, questions about the dashboards, and I'm not going to answer that on the webinar for obvious reasons. The good news is when the webinar is over, when the post-webinar survey comes up, you'll have the opportunity to request to be connected with the provider of the Treasury dashboards, and they'll be more than happy to answer your questions. And then I have, questions about again about that dashboard ROI. So again, the way I would tackle this is that, and it doesn't necessarily need to be the 7 dimensions of Treasury success that I have outlined for you, but just a listing, right? So what are all the areas that we're responsible for? What are the dimensions of being successful in each area? And then just look at it in terms of people, process, and technology. If you look at it in terms of information, right? If you're looking at the dashboard component of this, where am I lacking in information? Where, if I had better information, timely information, what would the associated value be, right, in terms of that? So that's key. That's kind of the first step. And then you want to build that business case. You want to have a formal business case set out, put to paper. You want to outline, and when you're building the business case, you want to engage your constituency. And this is a point that I think some folks miss, and I missed in the past as a Treasury professionals. You have two constituencies. One is the people that have to approve the funds. The other are the people who are going to be impacted by any changes that you make. So if you're wanting to invest in a TMS, let's say, for example, it's probably going to impact them, AP, AR, maybe some of your Treasury staff. You want to engage them as you're making the business case. How is this going to make your life better? You want to create advocates across the enterprise, and you also want to engage those people who are going to be Mr. Or Mrs. No in terms of anything that you're going to want to do. So you want to engage them, those that are more or less opposed to change. We are going to want to engage them as well. I have time for one more question, then I'll offer a few closing thoughts. Last question is around systems integrability. So the good news is about many of the systems, the more recent systems, especially the cloud-based systems, is that they are built to communicate with each other. There's specific APIs. There's flat files that can be passed back and forth. So a lot of these systems are really built to be collaborative systems. And so, of course, it depends on your situation. But it's hard for me to find the case where the right partner already doesn't have the API existing or is not willing, to work with companies in order to facilitate that. So that integrability issue, at the beginning, can look daunting, but when you start to look into it, you get to the right partner. A lot of those, I think, are almost missed. Those start to fall apart as well. So to put a fine point on it, Treasury dashboards, they can help companies deliver value across the enterprise. And they do that by empowering Treasury teams to master key dimensions of Treasury success. Cash and risk exposure visibility enables cash flow optimization and risk exposure mitigations. Dashboards can help a company correctly and dependably comply with regulatory and accounting standards. They can promote benchmarking and comparisons that lead to lower costs across the enterprise, and provide key performance indicators to promote continual improvement and enable Treasury leaders to become strategic advisors and servicers to the executive management and corporate enterprise. That's all about what I do, and that's all about what Treasury Careers is about, is empowering Treasury professionals to offer value across the enterprise. For those of you who have the slide deck, great additional resources here. And then, of course, we always try and fit our content together. Some upcoming Treasury Careers webinars. Would love to have you all attend these webinars and also Feel free to give me feedback on what you would like to see. We have leveraging technology to own your cash conversion cycle, diving deeper into what we talked about today, budgeting and forecasting. We looked at our biggest internal customers today, right? FP&A, accounts payable, that is really changing with automation. And then T&E expenses, which are really an area that doesn't really get enough attention that we can own in Treasury as well. I would like to once again thank our webinar sponsor, Financial Sciences. We appreciate their commitment to thought leadership. And please, I appreciate your consideration in taking this short survey today at the end of our webinar. And finally, to you, our audience, thank you so much for your valuable time. We look forward to having you attend future Treasury career webinars. Make the rest of your day great, everyone. Thank you very much.